Hello and welcome to our second episode of Welcome to Web3. We have a name this week, which is fantastic. We'll have a brand being launched soon that you can look out for on your socials. Well, it's probably already live now because you're going to be hearing it after the fact and once we've released it. But yeah, with me I have Andrea and Martien, and we are going to be talking today about all things decentralized finance or DeFi. It's a big topic, can be scary. Decentralized finance for an S if you're in the UK, Z for everywhere else, I think. You'll probably see that from my notes, guys, that I put S's instead of Z's everywhere, but that's just the English spelling. But yeah, so look, it's a really big
I
subject.
noticed that in the Google.
Yeah, exactly.
George,
Yeah, I know.
I noticed
Just
that in the Google doc. I was like, wait, what's he doing? And then all of a sudden I was thinking, oh my God, that's the difference between English and the
yeah,
United
we've
States.
got a
I'm
few other
so sorry.
differences, but that's one of them. Well,
Yeah.
it's nice to start on a bit of a light note for a relatively big
Such a
topic
big
and a
topic.
scary one. Yeah.
Yeah.
But like, Martien, do you want
Yeah.
to start off by giving us a kind of quick insight to your first encounter with DeFi, and what kind of piqued your interest to start off with?
Yeah, of course. Well, my first encounter with DeFi was during my wonderful time at Constellation Network, and I believe that Andrea still remembers this presentation given by one of our colleagues. And he's an expert in DeFi, and he's actually building a great product in DeFi right now. We're going to talk about that later. But he did a presentation about DeFi, and I was actually scared. I was like, "Oh my God, what is he talking about?" I had no idea. It was so technical, and then seeing the user interface from all the websites, and then you have to stake, and then you can farm, and then you can earn points, and then you can do this, and then you can do that. I was like overwhelmed by all the possibilities and the very bad user experience because I really like intuitive way of working, and with DeFi that's not the case. Okay, so we're seeing some improvements here, but yeah, to me it was like a big scary big large project that I didn't know where to start. But then Mike said something very important, and I believe that's how you should, how you are able to dive into DeFi and learn about it is by actually doing it. And after that call, I was pretty overwhelmed, but I was thinking, okay, I just have to do it. Just go in there, go to the DeFi platforms, and just do some DeFi in there. And I did.
Yeah.
And then I was able to understand it a little bit more. So we can talk about DeFi a lot, but actually you learn it by doing it.
Yeah, I think that's one of the
Point.
the kind of scary first stepping stones, isn't it? And I guess there's a few things that have kind of come up there. It's like, how do you get into DeFi? Andrew, maybe you can help explain a little bit for people that understand maybe more traditional banking models. We always seem to interact with them every day anyway. What the kind of difference is from DeFi to traditional banking, and new people to blockchain and things like that.
Sure. So with traditional banking, you can do things like borrow, lend. Well, you can't lend. Traditional banks lend. People can't lend. But there's borrowing, there's lending, and with traditional exchanges, you can buy and sell stocks and things like that using market makers on the other end. And there's always a central authority, basically, that controls this stuff, that processes transactions and holds the currency. And with lending, the banks will check your credit score and do all of these things because it's their money. Well, actually, their customers' money. But anyway, it's their money that they're responsible for, that they're lending out. So DeFi, decentralized finance, is all about peer-to-peer transactions. So there's no centralized authority that's running any of this. There is a platform that's built that connects people to people. So, and the platform runs with smart contracts that automatically execute if certain criteria are met, like certain financial criteria. So it's all done like in an automated way, bringing people together. So that means that through certain different platforms, people, individual crypto folks, can actually take their money and or their cryptocurrency and put it into the system to lend it. And they get rewarded for doing that. So they can add their crypto to liquidity pools. That's what they're called. It's all based on liquidity pools, basically. And so that's the funds of money, of cryptocurrency, that are used to support the borrowing and support the trading too. And individuals are encouraged to take their crypto, and it's called staking. You stake your crypto, put it into those liquidity pools, and in exchange, you get, you earn interest income. Yeah. And that's the thing that's, it's confusing for a lot of people. You have to have a wallet, and the wallet is where also replaces some banking things. I mean, the whole underlying theme of crypto is that you be your own bank. So basically, you're the custodian for your own funds. And so that's why you have to be super careful, because everyone wants to get them. And so you hold your crypto in a wallet, and then you connect your wallet to the DeFi platform. And you work directly with the platform to move your crypto into the platform and provide liquidity. And they'll walk you through the steps to create, you can create something called a liquidity token. And you put it in there, and then you'll earn interest income. But one of the main and one of the first examples of DeFi with crypto was decentralized exchanges. Big guys like Uniswap, and now, and SushiSwap, and now there's Jupiter for the Solana ecosystem. They actually replaced centralized, like traditional finance exchanges, where you had market makers that would have to actually provide the funds to make the market for different trades. And what that means is that they have enough funds to be the opposite side of buy and sell transactions. So when you're buying crypto or stocks or whatever it is, someone on the other end, the market maker, has to have the funds to sell it to you, or has to be able to buy from you to give you the crypto. So, and the way they make their money is through the spread, the buy and sell. The difference in price between, they'll buy low and sell high to you, basically, but the spread's small usually. Then they make their money on volume. And so you have either the exchange itself or market making companies will do this, will serve that role and make the market for a particular trading pair. It can be Ethereum to a stablecoin to USDT, Bitcoin to USDT, or whatever it is. Now with a decentralized exchange, they have automatic market making. So instead of having, a company provide that service, you actually have a platform that is built to create liquidity pools for different cryptocurrency pairs and different pairs that are traded. And so projects that want to have liquidity for their particular token will encourage people to provide liquidity for their projects, for their tokens, so that it can be traded. And they will give people a percentage of the fees, trading fees, and also interest, which is called yield, if folks will provide liquidity. And what they do is you actually buy an equal amount of the trading pair of each of the currencies that's in the pair. So if you wanted to provide liquidity for Ethereum, you would buy $1,000 worth of Ethereum and $1,000 worth of whatever it's going to be traded against, probably like USDT. And then you put that into the platform, and in your wallet, so you're connecting your wallet to do that, and out comes an LP token, which is a liquidity provider token, which is like a combo token that you can use, and you actually stake that LP token, and you automatically get fees on every single trade. Like depending upon what percentage of the full pool you own, you get a percentage of the fees based on that. And there are all these platforms now where you can take that liquidity, that LP token, and you can stake it to provide liquidity in other places too, or stake it there, and you can earn extra yield. So you're able, it's like a derivative that you're able to use to earn extra yield. Yeah. And there's like new things called liquid staking and all this stuff too, but we can talk about it a little bit later. So there's all kinds of stuff like, so first, crypto world blockchain replace or is offering an alternative with peer-to-peer transactions for traditional finance. And now they're creating derivatives that can only really be done in the blockchain world that aren't offered in traditional finance. So anyway, there we go.
I think that's what's really exciting, isn't it? Because where you were at the mercy of a centralized bank before, you don't have the kind of like autonomy. You've just taken us through quite a lot there, and there's lots of like nuances.
There's a lot.
No, it's great. It's really great, and I think each of those kind of like moments or steps you've talked about probably is an own kind of 20-minute podcast in itself. But it's really great to have that kind of like full journey of how it came about, why it's important, why people might want to engage in it. I think there's a big misunderstanding of DeFi and the people think the risk around it. If you read up on it properly, if you kind of go in with an open mind, and you're doing balancer pools or liquidity pools like you talked about, you can get real rewards off the back of it, and it's a lot better than any bank's going to give you. And if you're pegging it against a stable coin or something like Bitcoin or Ethereum, well, it's much more stable than kind of any other market. Yes, of course, there's going to be a bit of risk versus reward with any sort of kind of investment in a slightly more volatile market like crypto, but it's much more, the opportunity is much bigger. The control is much more in the user's hands versus just, leaving your money in an ISA or, a very low interest bank for, the next 10 years. And it's almost challenging that status quo, right? That's what's quite exciting about it. So I think lots of people are making money from it. It's here to stay. It's not going anywhere. We talked a little bit about ETFs on the last podcast and why that's interesting. So, this decentralized finance is something that's worth looking into because, lots of people making money from it, and so could our user base. That's what I think is quite exciting about this sort of conversation.
And it's pretty innovative industry as well. So a lot of new products will come into the DeFi industry all the time. And I think if you have a little bit of an understanding right now, you can keep up with all the innovations that's going on. And I think it can be very interesting, but you have to dive into that. It's not something you can do like, okay, I'm going to trade something on Coinbase or Binance, or not Binance or US, but it's not something that you can do like really easy between meals, for example. You have to get in there when you start with DeFi.
Yeah. And I think most, I guess for the people listening today, if you're looking to dip your toe into the world of decentralized finance, find a project that you like. Have they got a liquidity pool set up? Can you get some, a bit of your kind of like the money you can lose on a centralized exchange, and just start, playing around with it. I think that's the best advice you can give anyone. Back projects that you think have got a bit good passion that behind them, a good team, and then you can start seeing some of the rewards come back to you. So it's a really exciting time, but there's lots to learn, and I'm still learning in this space. I think the little precursor to this call was that we've still got a lot more to learn. But Andrew, I know you've got a deep understanding of it. Is there anything that you, from personal experience, it's more like a notable example where DeFi has made a real difference in your kind of financial transactions or investments? Have you got any good stories you can share with us? Sorry, Andrew, that was for you.
I would say DeFi has really impacted me. I mean, it's so exciting because, it's a great passive income source if you know where to go and who to trust. I mean, I think that's the biggest issue is you're connecting your wallet to these platforms. And so you have to be extremely careful because when you're connecting your wallet, you do have to approve transactions in your wallet, especially on the Ethereum network. Everything needs to be approved, but you can't, it's hard to tell what a transaction is. It's like, do you approve? It's like technical jargon, code. Do you approve?
Okay.
And then the next thing you know, your wallet's drained because you just approved a transaction for them to take your coins out. But there are new products that are coming out. I have seen them that explain exactly, like it's a little pop-up window and it's like, this contract will remove funds from your wallet into an unspecified account. And then you're like, oh, okay. Or they'll warn you if there's scam things that
Exactly.
are happening.
There are wallets
So
for that as well now. Yeah, Rabbi Wallet is doing that. They're doing a pretty good job in flagging scam addresses as well. And I could see them in my wallet popping up like flag, flag, flag. So there are a lot of products. Yeah, there are a lot of products now that are innovating in this area to keep you a little bit more safe.
Yeah, but what's so cool to see is there's so many new products that are coming out. Like our friend, who will leave his name out. I don't want to talk about it.
No.
But his project, it's called Curvance, and actually it was kind of based on Curve. Curve is a really cool protocol, and actually much more, probably one of the safer ones where you can actually provide liquidity, because they only deal in really stable coins and stable coin pairs. Because one of the risks of this whole providing liquidity is the volatility in price. And so you've got, especially if you have two crypto that are going back and forth, up and down, if your investment is stuck in that pair and you bought it at a certain price, then and the value changes, you have something called impermanent loss, which means that your crypto is stuck and it's worth a lot less money in there. But Curve offers, USDC to USDT, stablecoin transactions and wrapped Bitcoin to a different type of Bitcoin and things like that. So you can actually, there's much less risk for providing liquidity in there, and you can stake your coins in there, or stake your LP tokens in there. You earn interest for providing liquidity, and then you also earn Curve tokens, and that's a whole new thing that a lot of these liquidity provider places are offering is their own token. So, and it's a governance token. And so you earn these tokens, you can sell them actually, or you can use them to vote on changes to the platform, or vote on, I want to get, I think we should increase the yield on these particular pools. The majority agrees.
And then you have bribes.
More money.
Yeah, and then you have the bribes. Give me your votes.
That's quite an interesting probably jumping off point, right? Sorry, I was just saying that's quite an interesting jumping off point, because we talked about like LP tokens. You just touched on governance tokens as well. Do you want to just give people a high level, like LP we understand, we just gone through, but the governance tokens, and it's just interesting for people to understand the different kind of functions of tokens within this kind of Web3 space.
Oh yes, there are all kinds of uses for tokens. I mean, there are utility tokens, which are crypto. Well, let's start with the cryptocurrencies themselves. That's the original use of the blockchain, was Bitcoin and then Ethereum, and they actually served as alternatives to money, alternatives to the dollar and fiat currency. So it's digital currency, and with Bitcoin, they can only get to 21 million Bitcoin. So that was to solve the inflation problem and the issues that we saw in America, and probably the rest of the world too, in 2008, when everything just blew up in the economy, and there was very bad behavior by Wall Street, investing in very unscrupulous investments and things like that. But Bitcoin is Bitcoin, and one Bitcoin will always only be worth one Bitcoin, and there's only 21 million, and so it can't inflate. You can't just continue to
create more,
mine more Bitcoin, mine more. So the value of each Bitcoin goes up exponentially as the demand increases, and so instead of adding more Bitcoin, each Bitcoin becomes broken into fractional pieces. So the denominations become smaller, and then the transactions can, you start working with pieces of Bitcoin and things like that, which are called Satoshis, by the way. But anyway, I mean, that was an alternative, and it's like a true, even though it's electronic money, there is value there, because it's based on electrical output, and compute power and stuff like that. That gives it its value. And so that was the first use of tokens. So that was Bitcoin could be used as money. You can buy and sell things with it. And then after cryptocurrency, you've got all these utility tokens as well. And so utility tokens can be used within an ecosystem where they can be used to reward people for different behavior. They're also used to pay node operators in the network to run the network. If you're going to, give your computer, let your computer be used to support a network, then you'll be, and process transactions, then you'll be rewarded with cryptocurrency in exchange. And so it's used for all kinds of different things. Governance, if you want to participate in a protocol and make decisions and help, everything is group oriented in crypto. It's all about individual empowerment. You have your money. You have a say in how things are run. Everything is decentralized. And so that also requires a lot of accountability on each individual's part and responsibility. And so, but it's a whole new world. There's so many avenues we can go down. I mean,
Well, regarding the DeFi stuff, when I started DeFi, I just want to mention this because this can be helpful for people that are just starting out. I went to the website, with the llama, DeFi llama, and there's a lot of information there. And that's what, DeFi llama in Spanish, I think, or DeFi llama with double L. For me, that was pretty helpful because then you can see an overview of the change and all the projects and all the liquidity pools. And you just go in there and just figure out what everything means. But it's like one overview of everything that's going on, or a lot. So we can just add that to the...
let's add that in the link below. I also think we touched on a little bit at the start. The kind of user experience to start off with was quite scary, because everything was being figured out. Like it was figuring out the technology, it was figuring out like how it works, and now more and more people are adopting it, getting used to it. You're going to see it just being a little bit easy. You've brought up a great example about flagging like scamming wallets, things like that. I think just onboarding, on ramping, those sorts of things are going to be a lot easier to do than they have been. So I think the way we probably saw banking evolve and the likes of things like Monzo or, Revolut, that simple kind of like in your pocket, very easy to do. The apps are there. It's probably going to, I think, as products improve, product developments come along, it's going to be a lot easier to kind of like navigate your way through what feels like quite a complex market at the moment and an opportunity. But that's what I'm really excited for, to see that kind of be a bit more available for mass markets. The best advice I can give is to kind of get involved now. We kind of said at the start, which is to start, following things that interest you, going after it, because you can get this. There's a lot. If you currently, invest in stocks and shares, you're not going to be too foreign from that kind of like side of things. This is just a nice way to on ramp and see a lot more kind of like upside, just because the markets are just, they swing a lot more. So. Is there anything that you guys are looking for in particular or excited about for the future of DeFi, or one thing you'd like to see change for anyone working in the space at the moment?
Well, for me, it's the UI UX. To make it more understandable for people, because I did not only for myself, I can work my way around it, it's okay, but in the meantime, because I spend a lot of time in it, but a lot of people, I think if you want to attract a lot of people, then this has to improve. And actually the project that our friend from Constellation is working on is the project Curvens. They are solving a lot of these issues, right, Andrea? We dived into it a little bit, and they are actually solving a lot of these issues, like different change, different liquidity pools. You don't have to think about the change one liquidity pool is working for whatsoever. So they simplify it a lot already. So I believe there will be a lot of innovation in the coming years.
I agree. I think fixing that user interface, and I am seeing it. And so, I mean, you're going to have to do that for adoption. If we're going to get mass adoption of this, we've got to fix those, make it as easy as possible for people to do that. One thing that's cool and new is liquid staking. And what that is actually you stake your tokens into, so there are these proof of stake blockchains, like the new Ethereum, the updated version of Ethereum is proof of stake. And that just means that in order to participate in the network and run a node, you have to stake a lot, like 32 Ethereum, by the way, is what the requirements are on the Ethereum network. So you have to own that much Ethereum, so that you have skin in the game to prove it. And you have to keep that amount. You have to hold it there. So that is not liquid. Basically, if you want to, you can still earn fees for transactions and whatnot, but you have to keep 32 ETH. So to make this easier and to make to keep it from being only wealthy people can hold it, they've added these like staking protocols and liquid staking where you can have liquidity pools where node operators can dip into those pools. And so individuals can stake their Ethereum and add to, share in that 32 ETH requirement. And so more people can.
What's going on?
I don't know. We've got some random things popping up, but it I saw some bubbles and I thought someone's winding me up, but I don't know how that's popping up.
Yeah, actually, Andrea, what you're talking about right now, that's correct, because I was in contact with one of our old colleagues as well. Remember Anna from Australia, and she has some people that are doing the same thing with Tau, BitTensor. So, and then other people are running the nodes, and then you can just put your Tau in there, your tokens, and then they run the node for you, and then I can pull it out whenever I want. And that's the liquid staking part.
Yeah,
it's really easy.
Yeah, you put in this money. It's crowdsourcing, basically. Crowdfunding. Yeah. So they're crowdfunding these node requirements. And then in exchange, so your tokens aren't stuck there, you can take out a version of the token, a replacement token called STETH, like staked ETH. And you can use that ETH. So even though you've got your ETH, your real ETH is staked, you have this liquid staking option where you can take out kind of a representative token, and you can take that puppy and put it into a platform and earn money from it. So you can earn interest from it, and then you can earn additional tokens from the platforms that offer that option. Lido is one of them. Anchor started it too. So
that's really interesting stuff.
Our friends, our friends project, Curvance, has opened his platform up to all kinds of different protocols, Polygon, Solana, all of them, where you can take your representative token from staking into those pools to support decentralization, to support the proof of stake networks. You can take that token and use it on his platform, and he will, offer yield, interest and really tokens and things like that, rewards. And so he got all kinds of funding from these other protocols who were like, thank you for offering additional liquidity, incenting liquidity for our networks. We appreciate that. So
it's great.
It's a win-win.
I guess a quick one for
my computer
our
is almost
listeners.
dead.
Okay, that's
my
good. And
we're just about dead.
We're about to wrap up anyway. Just a real quick one before we go. 32 ETH current price for the listeners, depending on when you're listening, is about $80,000. So that's just to give you some context of how much you'd need to stake a node in Ethereum. This is a perfect place to wrap up. We've got lots more to talk about, and we will be coming with a nice new topic next week. If you want to know anything more about what we've talked about or dig into it a little bit deeper, you can find a link below, and you can have a little chat with us on our social networks too. But thank you so much for another amazing chat this week. Any advice before we drop off? Anything else? Any advice for anyone out there from either of you?
Just do it in DeFi. Just do
it.
You have to do it.
Exactly.
Yeah,
I think
try it,
get
involved. And be safe. Be careful.
Be safe.
Don't connect your wallet to any old thing. Make sure you're connecting your wallet to good quality projects.
Nice. Well, that's a wrap.
Okay,
Thanks so much,
guys.
and have a great rest of your day, guys. Thanks for tuning in. Cheers.
Thank you. Bye.
Yeah, take care. Bye.
Bye.
Okay, that one's stopping. Cool.